What's up, guys? Vlad Ethereum. So we're still talking about the Ethereum capitulation to $500. It's more so of a range. Doesn't necessarily have to hit exactly $500, but essentially still a new low and lower than what people think it's gonna be for sure. Especially because people think, it's not. We're in the bull market. It's not. It hasn't tested the lows. We're good. When they don't realize because it hasn't tested the lows that they're more likely to break later. Because we're certainly not heading higher. Like what did you think was gonna happen? We just gonna start trending up now? All right, yeah, totally. You haven't seen capitulation, anyways. So it's Ethereum dominance we're talking about today. We're talking about a bunch of other dominances. Brought it up in the last video. Said I had to make another video about it, and here it is. So, it's obviously, it's episode 2, dropping Ethereum dominance, Ethereum to five. We're gonna get into all the details, blah blah. If you're watching, obviously I post. Well, I actually no, not obviously. You don't know this, but I post daily alpha on Twitter. Follow my Twitter. Link in the description. Make sure you subscribe and like the video, because definitely trying to get to 1,500. It's my goal, definitely. For, I don't know, I guess the first ladder of this year. However long until that happens, I don't really care. Just trying to have actual alpha out here, so by the time all the tourists come in, they see I'm not full of shit. So that's because a lot of people usually go to full of shit people as like their main credible sources, and they can't tell the difference. I definitely couldn't tell the difference at first, but yeah. But anyways, so follow to stay up to date. So all this. Obviously, I'm wealth building. I don't know. It's more like Bitcoin building genius, because I don't necessarily care about the USD amount. But yeah, I'll be stacking sats out here. Wealth building genius with Bitcoin, with Ethereum. Obviously, I'm Vlad Ethereum. I started in crypto. Started crypto in April, fucking 2021, 17. Then had to figure out how to actually make money, because this bodybuilding shit wasn't cutting it. Actually, it's kind of hard to make money, fitness industry. But I found a better path. I didn't give up on lifting, obviously, but I was like, yeah, let me do something smarter. And then when I saw the returns, I was like, let me just see this shit. I was like, because everything else is bullshit. I was just over convinced. Anyways, anyways, so yeah, I usually don't give out bullshit. I usually try to keep it pretty factual, and I try to keep it mathematical, and I try to go with non-biased facts. But anyways, so none of this is financial advice, just my opinion. Do your own financial research. I'm not a financial advisor, etc., etc. Moving on. So I'm plugging my phone. So yeah, write down these charts definitely, because with these charts, I'll just read it. I don't know why I'm trying to summarize I pre-wrote these for a reason. So write down these charts. A lot of YouTubers in this space, a lot of them 2 to 3 have only which I've seen have not bullshitted when it comes to other data outside of the crypto space. Majority of people only know how to look at one chart, see one pattern. And even if you're good at identifying the patterns and you don't know why they won't or why they will trigger based upon other things happen in the market outside of that USD pair, as if it controls all the other macro factors, is bullshit. But a lot of people can't see it that way. So it's like some people analyze things like altcoin, Bitcoin pairs, multiple dominances, as you can see on the right side, and a lot of people don't check the on-chain data, which can sometimes reflect the actually not sometimes, which does reflect the sell pressure or buy pressure, who's buying, who's selling, etc., overvalued, undervalued, percentages and profit, etc., etc. There's other things that you can learn from on-chain data. I have Glassnode and I pay for TradingView. I might pay for this other service. I don't know. But those are just 2 services that I use personally that I found to be very helpful with this crypto stuff. Because, it's not about who you go to or who you learn off of. It's about who they learn off of, right? And then it's about how valid are their sources of information, and can you get to those sources of information for free, and if not for free, how cheap can you get the information for consistently, right? So we're going to be talking about total crypto market cap, total crypto market cap 2, total crypto market cap 3, Bitcoin dominance, Ethereum dominance, USDC plus USDT, the biggest stablecoin dominances put together. And then that we're going to be talking about altcoin percentages. You can look at the equation if you really want to get the graph, but I'm probably going to confuse you if I say what it is. But basically, the reason why it's 100, it's 100% minus the, let's say, 40% in Bitcoin dominance, let's say 25% in Ethereum dominance, 10% in stables, and then that gives you the rest of the other percentages, because the entire crypto market cap can't exceed 100%. It's not possible. It's literally, it's a whole number is 100%. That's just how it is. You see it as one. It doesn't necessarily matter the USD value in it, but just because, let's say I mean, it can go up 3x. Don't get me wrong. That's not what I'm saying. I'm saying when you look at a number in perspective and you want to divide it by who's playing, you don't judge that number off of a higher percentage than something like 100. If you get what I'm saying, it's hard to explain. I mean, it shouldn't be. I think you should get what I'm saying. It's like if I have two pots, right? One is blue, one is red, but ultimately there's two pots, and 50% of the pots is the one that's blue, one that's red. Let's just say 50% is, well, obviously not even let's say just say 50% is blue, 50% is red, but both together equal 100. That's a better, okay, sure. Yeah, that's simple terms, right? You have all the cryptos put together, they all equal a certain sum of money, but regardless, put together, they are 100% of what they are. Anyways, so this isn't about just chart to charts. This is about how all these charts work together to give us valid information that isn't going to lead us astray on thinking bull market narratives have come around when this is just another relief rally again. We're also going to talk about the Ethereum Bitcoin pair, but moving on. So topic number 2, Ethereum capitulation. It's February 5th, 2023. So to understand why Ethereum will eventually capitulate, we have to understand who are the market makers, right? We have to ask that question. And the thing here is accumulated Bitcoin has been in a downtrend for 9 months, while the whales have been selling off that Bitcoin because they have over 1,000 Bitcoin. Selling off 8,000 or thousands of Bitcoin does take months. Main requirements include exit liquidity, time, buyers. You have, buyers can be institutions, unlikely because usually they're the ones with thousands, right? But buyers are usually, in most cases, unless you're a really rich guy, but even then that has its own limits, right? Because there's people with 100 Bitcoin that fumble. I'm going to just put it plain and simple. Most of the buyers are retail investors, right? And then, obviously with my sources down there. Moving on. So retail holders are 100 Bitcoin to 10 Bitcoin to 1 Bitcoin to 10% of a Bitcoin to 1% of a Bitcoin. And whales also can correlate this cold storage. They have their cold storage wallets, which can be, which we see on chain as above 10,000 or more as a subsection of all the divisible wallet holders by wealth, right, in Bitcoin. And since they have that cold storage, but it takes since it takes months to sell off thousands of Bitcoin, I don't have the chart here, but I have different charts to compare. What happened in 2018 was they sold off for a period of 6 weeks in a row, sending down the price from $6,000 to $3,000. And it wasn't necessarily that sold off. It didn't sell off. They just made it over available. Because think about it. Why would they make 100K Bitcoin available over the price of 6 weeks and expect it to actually sell off when they were taking months and months and months before? That doesn't make sense. They want to capitulate the price. People say manipulation isn't real. And if you say manipulation isn't real, then you don't know what the fuck cash flow is. You don't know what a market maker is. And that's okay. You're not supposed to understand what a market maker is. You think they want majority of people to know that they're being bamboozled on a daily fucking basis? Like, no. They want you to think that majority of the market is not hedge funds. They want you to think majority of the market isn't these hidden ass families, these hidden ass congressmen on some Nancy Pelosi shit. Nancy Pelosi shit, right? Insider fucking trading. They don't want you to know that the same people that operate within these companies sell and buy the stocks at times because they know what's going to happen with these companies. And some people can insider trade very fucking well. It's kind of fucked up. That's not majority of the market action. I mean, obviously, the SEC is here to protect people from investors like that. I mean, because they don't want the big whales to monopolize, but they want it to be a free market to endorse capitalism in America and et cetera, free market growth, technological evolution, but it needs a breeding ground for motivation, which is also money, but they don't want to also de-incentivize that by, saying that all of it's fucked up, right? Or something like that, anyways. Moving on. The reason they made Bitcoin over available was just to create fear. And if, obviously they can create fear as they please, but that capitulates the price. Retail investors sell off and they can get even lower before they create the bottom, because all they want to do is create the bottom. Because if people aren't scared and they start buying in too soon, but they get scared later, then what that means is they've given retail too much leeway to create the bottom. They want to make sure retailers gotten all their emotional juices out way before they start buying again. Now, we have the on-chain activity here. Some of you didn't believe me, but the left side, you can see whales selling since May 2022. And then it's, oh, wow. Look at this. It's crazy, right? It's so crazy. Who's buying this Bitcoin? Retail investors. 10 Bitcoin, 1 Bitcoin, 10% of a Bitcoin. These are just some of the examples. But for the most part, the buyers have been retail and they have been the exit liquidity. Because notice how even though retail is still buying, they're buying at higher lows. And the whales are still offloading as they please on a larger month-to-month trend. So if retail is buying, they're offering money for the Bitcoin as whales know that they're suppressing the price. Their exit liquidity, fucking dumping on retail, fools buying since May, bro. If you didn't see this since like September, then you're fucked. This was obvious. Bro. Anyways, what's controlling... Or no, not what's controlling. Whales controlling as market makers and other factors. Seeing how whales control the biggest crypto player, the fear and price capitulation, they create causes for these listed market shares to drop as they increase the Bitcoin dominance because it has some form of because it has to come from some form of active liquidity, like Bitcoin dominance, Ethereum pairs, or no, not Ethereum pairs, stablecoin dominance pairs, and altcoin market cap percentage. This is the cost to increase Bitcoin dominance by siphoning out liquidity from smaller players. That's easier to scare because if you control the main player, then you can fuck with the rest of the market by proxy, not directly. Bitcoin whales don't have to own Ethereum to suppress the price of Ethereum. Bitcoin whales don't have to own ADA to suppress the price of ADA. They're already doing that shit. It doesn't need to get proven because it is. It is now. To say that ADA could have stayed 50% of where it was in its all-time high would be bullshit. Because if Bitcoin is dropping 50%, ADA is going to fuck up 300%, right? That's exactly what happened. That's why ADA is at 34 cents right now, right? And that's why I'm not tweaking over these things, because here's the thing. With a lot of these projects, they're going to do really fucking good in the bull market. They're going to do fucking amazing. I'm looking at projects like Solana, Cardano, fucking Aptos. I know people are saying that Aptos is bullshit. It may very well be, but guess what? The narrative is gonna eat up the new tourists, and the new tourists are gonna get used as exit liquidity. And fuck it, I'm not trying to say that that I'm going out the way to use these people as exit liquidity. No, I'm not saying that. But guess what? If I hold the bag, I'm just getting used as exit liquidity, right? So I think anybody has the right to look at the investment that they want to make, look at the speculation, look at who's going to be playing the game, and it's all. And then yes, it is damn near a game of a fucking hot potato, because you don't want to hold the stock until it goes to zero, and everybody wants to sell it to all-time highs. So never let anybody tell you that you're bad for taking profits in the system of fucking capitalism. Like, if you think you're not getting capitalized on because you're being a good person and you don't want to dump your money, guess what? A company doesn't give a fuck. And they're going to fuck 10,000 more people like you when they dump their VC tokens. So if you're going to get on the VC narrative, just be aware of that factor. You're not being a hero by not selling. I'm going to say it again. You're not a fucking hero if you're not selling your tokens at the all-time high. Don't act like you're, oh, I don't want to leave somebody holding the bag. Somebody's going to be holding the bag regardless. Somebody's like, bro, for the market to not completely fail, somebody does have to hold it a low. Like, you realize that, right? Somebody has to actually hold it a low. Don't let these people fuck with your head and tell you that. Anyways, that's a completely different conversation. But this is the cost of market control with Bitcoin dominance. Blah, blah, blah. The market share is dropping. Stablecoin. I said it's siphoned back in. Okay, but moving on. If the market share percentages are dropping with altcoins, then you therefore have to assume that in correlation with their Bitcoin pairs, if the altcoin market cap is dropping, but the Bitcoin market cap is going up, Bitcoin necessarily isn't going down, even though the crypto market cap is going down. If it takes up more of a percentage, that means the percentage gains that keep it afloat don't have to be from the market cap superseding what it already is. It just has to take more of existing market share. And some people don't get that. I'll say it again. For Bitcoin to stay afloat at same prices or move higher, it doesn't have to take new market share that gets introduced into the crypto space. It can take market share that already exists within the crypto space. Not new money, but money that already exists. That's why Bitcoin dominance increases as the bear market goes on. Moving on. So we're going to break down these individual charts. Total crypto market cap. Gonna dive into the TA in a second. It's dropped 76% to 73 billion from I know above 3 trillion. That 77% drawdown was the low as of now. Keyword as of now is probably going to get challenged. Currently sits at 1.039 trillion. Right now, the price action is trading below a fair amount of moving averages this bear market. And right now, I believe we just have another fake out. And as these averages go untested for longer, because although we were able to turn them into support on the short term, on these weekly charts, they have not been retested with a red candle and a green pullback upwards. They have not. So these things take more time to play out and analyze than people think. Just because it's getting retested on the daily, that's fucking irrelevant. That's fucking irrelevant. Well, fuck it if we retest 4 days out of 14 weeks, but we fail to retest and we close negatively on a 2-week time frame. People keep forgetting to check the weekly. I used to be one of those people that said the weekly didn't matter as much, but honestly, it matters more than anything. Because you can't constantly analyze all these damn charts all at once, like on these smaller time frames, and say you're paying more attention to the macro trend. It's just not possible because your attention span is limited. Moving on, alts make up 25% of this market share. So currently sitting at 1 trillion, that's about 250 billion 250 billion it takes up. That's going to go down. Ethereum takes up 20% of this market share. So about 200 billion in Ethereum market cap, right? About 200 billion there. And then, yeah, you have the stablecoin dominance. You got 100 billion there. And then the rest is basically Bitcoin and select fucking alts, right? Moving on. Moving on. So right now we're slightly above the so we're above the bull market support band, and we are encountering the definitely the weekly moving averages, the daily moving averages are what we have as support right now, but we're testing the weekly ones. The daily ones are lower than the weekly ones. The weekly ones are more constructed around the price, if you can see that. The thicker yellow and blue lines are the 200 week ones, and the thinner yellow and blue lines are 200 day moving averages. And then the green and red bands is the bull market support band, which is a 20-day SMA versus EMA, and they warp together essentially. Yeah. But trading above these is bullish, trading below these is bearish, and we broke out from the downside trending resistance line since about August, right? But if we can't hold that as support, this was just a fake out, unfortunately. And a lot of people haven't understood that majority of these things have not gotten retested on a weekly. Closing above them is not a retest. I just want to make it known. Closing above these things is not a retest. It is just closing above it as short-term support. Like, that's all that is. Moving on, we can see we made lower lows from the the June low, right? But my thing here is, if the bottom is in, then why are we just repeating what we did immediately after the June low? Like, I mean, my thing is, this just looks like the start of another fucking red candle. If not now, later, right? This looks like the exact same scenario. You make a new low, you run up higher, you capitulate a little bit more, you make a new low, you fake out with the relief rally because you retrace 30-40%. But that's just the entire downside price action of the S&P. Like, bro, nobody said that when we hit new lows, we have to stay there forever. But notice how old prices for Ethereum of let's say when Ethereum first dropped to 2.8K, and everybody's like, oh my god, once in a lifetime. But then it rebounded to 3.5, but then we got shut down at 2.8, and then we got shut down to 2.1, and then we got shut down at 1.9, we got shut down to 1.6, 1.3, 1.1, 900, all the way down to 880. And you want to say that we're gaining support, but the trend is down. This is just the crypto market cap total, including Bitcoin and Ethereum. Moving on, we have total 2, excluding Bitcoin, dropped 75% from 1.7 trillion, sits 65% down at 589 billion. Barely broke above the trend line and moving averages, can definitely capitulate, assuming that the rest of the altcoin market cap has not bottomed. I do not believe it has bottomed, because we just saw a downwards trend on the larger macro scale for the entire crypto market cap. So taking away Bitcoin, taking away the biggest player, you have no fucking hope. Especially if the trend for that is down too. So, you see we're using the same stuff again. So you'll notice here that the breakout, quote unquote, was slightly higher. Or no, not slightly higher, slightly lower, right? But that just means that there's just less liquidity here, right? What I will say here is I didn't identify this descending channel, actually. There's a descending channel here, if you know how to draw that. I didn't see that, but there is. There is. You can definitely, if you can get the touch points. Obviously, I can't do it now. This is a presentation. But, I mean, I'm not going to talk about that. Trading above the moving average is short term, but we've barely broken out. And if we close below the 200-week EMA, then that's kind of fucked. I mean, yeah, that's kind of fucked, man. Like, it's not good. It's not. I mean, yeah, we have the daily moving averages that support 200-day EMA, SMA, 20-day EMA, SMA, but that's not enough for me to be like, oh yeah, we're trending above them. We are above them, but we are not trending above them. That's the main thing. We are not trending above them. We are trending into them. That's something we could have been bullish on, right? Obviously, trending into them was definitely a scenario, but trending well and above them for the next few months, people think that that's possible. It's not impossible because I'm sure it will happen in the later part of this year. I'm not saying that it won't. I'm just saying now we just like, bro, we like think about it, bro. Less than 90 days ago, we were talking about Bitcoin at $8,000 because FTX, and that was just in November. But you want to go ahead and deny the active scenario at play? Like, no. Anyways, looking at total 3, exclude Bitcoin and Ethereum, down 73% from 1.1 trillion, currently 383 billion, descending channel, acting as support price and resistance. Not impossible for a break, but we're just rebounding from lower lows that were just made. And the retail and moon boys think this is a trend. A price deviation isn't a trend. It's just a price deviation. And if it's a price deviation that usually doesn't happen, maybe you should take and think about a scenario to make that situation go in your favor. Not financial advice, but if it's a price deviation, that means it doesn't happen. If it doesn't happen for the larger majority of the time, the question is, how can I benefit? And I already know how I benefited. I fucking left. Fucking left the market. Like, fucking left, right? But what I know is that once we go back down to these new lows and shit, this is essentially just a new fucking game here. That's all. It's all that this is. It's just a new game. Anyways, moving on. So, total crypto market cap, excluding Bitcoin and Ethereum. Right, so descending channel on this one. What I realized, I might have I wonder if I put the same chart on this. I'm not totally sure. I don't think so. But regardless, they still look similar anyways because it's taking into account the same measurement of the market cap, just in different ratios. And so it's not, the charts aren't going to be completely different. I'm just kind of wondering if I put the one chart wrong before. But anyways, assuming that this is the third crypto market cap, total 3, we have the downwards trend line, downwards resistance line. Or no, fuck. Descending channel. Okay, god damn it. Restart. Fuck. Explaining this shit goofy as hell. Descending channel, descending support, descending resistance, right? In this channel, we have supports as the moving averages, but we're finding resistance here because if you see what's circled, currently we're rejecting off of that. And rejecting red now means that we are probably, that the odds of us, unless this is going to be a retest, the odds of us moving higher aren't gone, but we are diminishing that. So that's important to keep track of. Today is Sunday. Today is the weekly close. So keeping track of this weekly close is the most important thing as of now. I'm guessing it's going to reject. It's already rejecting to me. I'll probably check it after the video, but I'm 90% sure that we're just going to reject. And this is the altcoin market cap right here. You're $324 billion worth of liquidity, excluding Bitcoin and Ethereum. So there's that. Yeah, there's that. So moving on, the Bitcoin dominance uptrend since September, slow support gain on the Fibonacci. Fibonacci's to support the Fib at 23.6 retracement level. The best case scenario, 50% Fib, close above to head higher. It falls, potential 38.2 Fibonacci reaction. And if that fails, 200-day moving averages as support, plus the bull market support band. And falling below that, I would be worried, because even though the 23.6 can come in clutch at that level, it's not going to be stronger than 5 supports just lost. Right? And especially those retests as resistance. But the trend right now should be perceived as up until we start losing support. And I think eventually we will, but that's going to be in the latter part of the bull market, not anytime now. So as this moves up, as this moves up, 40, or not 40, from 44 to not 40. I don't know what it is right now, actually. Say maybe 40% to 45 to 50, 55%, 60, 65%. As this moves up, the remainder of the market share has to be divided up by the 4 biggest players. I think I'm going to go through another video, or no, actually, because I think I'm making this kind of long here. I don't want to make this too long. So right now we have the Bitcoin dominance heading higher. You can see on the left side that we are far away from testing the weekly moving averages. I just want to say that. But on the right side here, we see that we have a slight uptrend, and we're trading above moving averages, which is more bullish because we've retested at the 23.6. And if we're going to be retesting now at the 50% level of 43% dominance, then that means we have reason to believe that we can see the 61% level at 44% dominance as a support level, to maybe add wicks up to 46%. And then as we head higher, I mean, I'm assuming this will correct heavily after a certain amount of uptrend movements. But assuming, I mean, this could just be an entire, I don't want to speculate on Elliott wave theory because I don't know the rules, but I'm not going to go into that. But I mean, eventually, once this corrects low enough, I mean, not low enough than what has already been made, but let's say it goes to 48, it goes back down to 46. That's kind of normal. That's kind of normal. And even if it stays there, it might just need to cool down for a second, because you can't force these things. Well, you can. You definitely can force these things, because if you're a whale, you got enough money, you can do whatever you want. Right. Moving on. But yeah, trading above the moving averages is bullish. We have a short-term support line, and Fibonacci levels, price action revolving around those levels is potentially acting as support. So moving on, we have the Ethereum dominance. Ethereum dominance getting cornered for breakdown, rejected at 20.32% 3 times. Upwards trending support getting tested, 200-day EMA and SMA support. We have an ascending triangle. Technically, that's a bearish pattern, similar to an ascending wedge, except it has an apex, and an ascending or descending wedge can become a triangle if it proceeds long enough. But these lines have much well intersected already. So we have a breakdown. 31%, or we might as well call it 14%, to potentially 17.42% if the dominance breaks down from the ascending triangle, and if it breaks the 200 weekly support on the on the EMA, then the next support we have there is a 4-year support line. And if the 4-year support line breaks, we have the 200 weekly SMA as support. And then after that, we have the Fibonacci extension levels. And looking at all these levels of support, breaking all these levels would be bearish. I don't think we'll break all of them. I think there's reason to believe that a fair amount of these can get tested. Saying all of them will could be bullshit, but it's not out of the question. You have to go with the most probable standpoint. I believe that I'm going to move on so I can explain which ones I believe are going to get tested. But on the left side, you have the 4-year support on the Ethereum market cap dominance. But on the right side, you have what's happening now. Fake out from shorter term time frame. This is all weekly, by the way. I never clarified. All these charts are the weekly time frame. Anyways, moving on. So we have fake out from the descending triangle, but we are trading above the moving averages. However, we have found resistance at the, let's just call it, well, I mean, actually, you can rewind. I already stated what the resistance levels right now. I just don't have them committed to memory specifically by number. But, yeah, it's about, let's say, 20%, 20, 21, 20, let's just say 21 or maybe 20.5, at somewhere around their resistance, which is forming just a horizontal resistance line in a way. Has yet to be confirmed for a third time, I will say. But that does not mean that those two price points have no value. And if we're going to converge off this trend line up into the resistance line, off the moving averages as well, and the moving averages are carrying it, what I'm looking for potentially is a breakdown. We break down. We're trading below the moving averages, retest, breakdown. Or we go high enough, run into support, rejection. And if it's eventual rejection from the support, we have no choice but to start trading below the moving averages. I mean, obviously we could break up, but that's not likely, assuming that Bitcoin dominance is going to be going up. If that's the main thing that's going to be going up, this should be going down in correlation with the other altcoin market caps. Moving on. Had to scratch myself for a second. Moving on with the 200 weekly EMA, 200 weekly SMA. We have some lows there that have been tested at 17.47%. 3 times that have come in clutch as a support level. You could debate whether that's valid or not, but I mean, from what I've seen, it has some touch points. I find it to have a little bit of weight. Breaking that, me seeing that the last time we found support was at the 200 weekly SMA. If the 200 weekly, I mean, not SMA, the yellow line I'm talking about, 200 weekly EMA, if that's above the 17%, it may be harder to drop below that, but it also means if we do drop below it, it has way more value. If you get what I'm saying, because if we break a support with higher weight to break a weaker support, but both of those become resistance, and the only thing we have left is a big, and I mean big resistance line, I mean support line, because again, 4 years of support is 4 years of support. Breaking that down, retesting it, backtesting it, retesting it again, and rejecting would be very bad for the Ethereum price action. And actually, it hasn't done that in 4 years. So if it does do that, fuck, right? Moving on. Anyways, after that, I mean, shit, I don't even know if the 200 week SMA would hold, because if we break a 4-year support line, that's basically breaking 200 weeks worth of data. Like, am I not tweaking 50 weeks in a year times 4? That's over 200 weeks, so that's damn near like breaking a 200 SMA way before we reach that point. They may converge, in fact. But after that, I mean, I would say that there's little to no hope for me. Not saying Ethereum's gonna fuck up, but this would be ultimately bearish here. Breaking this shit down at this point, I don't know if these fib extension levels would even fucking hold, because the value of these other supports is more than these speculative extension levels, in my opinion. Moving on, that's the Ethereum dominance. That shit's bound for Goblin Town, in my opinion. Now we have USDC. Fuck. I had to fucking blow my nose. We have USDC plus USDT dominance. We have a downtrend for months. And by months, I mean months. Bearish volume divergence. Moving averages fail to support. And supported the recent low of June is getting tested, but we're still making we're still making lower lows as of locally. And if this Fibonacci support fails regularly, or no. I'm saying that wrong. If those supports fail, then we have the Fibonacci extensions. And because there's less stables, there's less DeFi liquidity. And if there's less stables, there's more actual liquidity with banks or in cash. And that means, well, it's just another way of liquidity siphoning out from the market. Moving on. So on the left side, we have a larger support line on the uptrend that's getting tested, and we had the Fibonacci retracement level from the high to the low locally as the June low. And, that's where you get those extension levels. Moving on past that to the middle chart, we have that trend line in the middle, not even trend line, support level at 10.23%. It's not really confirmed for a third time, but to say that breaking the June low would not matter and saying that we are getting on ball's edge, fuck. Yo, what did I just say? Yo, okay, yeah, nice, bro. Anyways, assuming we're getting on fucking ball's edge here, that sounds sus as fuck. That's funny. That if we break that, I mean, we're already trading below most of the moving averages and the support line we had. This is a breakdown to me. You can see that on the right chart, seeing that as we traded above all these moving averages on the 200-day and the 200-day EMA, SMA, and 20-day, EMA, SMA bull market support band. Breaking like 4 resistances as we had those as support for the past, basically since the start of the bull market is bearish. And I honestly didn't see this heading down, but the more I looked at it, the more I was like, oh, okay, well, stable coins, people aren't even going to be running to stable coins after a while. I'm like, damn. And we may very well have to look at these retracement levels. But we'll find out once we go low enough and form new resistance and etc. Moving on, we have the altcoin dominance. You can type in that formula into TradingView if you want to get this chart. It's a formula, but it's not hard to... I've explained it already. But we have a downtrend channel, bearish divergences, potential resistances at the 200-day SMA and EMAs with the bull market support band. And if rejected, the next support is at the recent lows at 61.8% retracement level and 78.6% retracement level. And if this fails, the final zone of support would be potentially the 21.38% retracement level. And moving on, it was hard as fuck to graph so many damn wicks because the altcoin dominance is very wicky. It has a lot of volatility. But I just drew a channel and I just took the low to the high. And you can see with that box, the red box that I've highlighted, that was old support. But if that breaks, then I'm looking for a real fucking capitulation. Because, not only to get to that box do you have to reject off the moving averages, but you have to reject off 4 moving averages, reject off the 50, break the 61, break that box, and then you're looking at, okay, 68%. Shit probably won't hold at that point because we just broke 5, 6, 7 things. And then I should probably have threw an extension, but I didn't. But yeah, that's the case here with this. That's the altcoin case. It's capitulating pretty damn heavy. And people are talking about bullish No, the things that you are interested in attract the most liquidity. Therefore, in bearish times, it is easier to move them up. However, looking at shit that's not getting attention at all, try saying that you're bullish on the 50th, not 50th, but the 500 most popular cryptocurrency. Try telling me at the 280th page or altcoin, right? Try telling me at 1,000. Try telling me that at the 800 most popular altcoin. Like majority people are saying we're bullish. You're looking at top 10, bro. And if not top 10, top 50. That's still big ass players, bro. Big ass players. Anyways, moving on. Now we have the Ethereum Bitcoin charts. Fake volume downtrend. Not fake volume. The volume downtrend. I didn't put the volume on here because I wanted to talk about the SMA, EMA. But either way, the volume is dropping on that. Wanted to talk about the moving averages more. We do have a fake out from the symmetrical triangle, similar to the one on the Bitcoin dominance, right? Super crazy how those correlate. Anyways, moving on. Or not Bitcoin dominance. Symmetrical triangle fake out similar to the one on the Ethereum dominance. That's what I meant to say. But moving on. Target, if you looking at the bottom of the triangle, going down to basically 0.4 Bitcoin per ETH, would take a lot, but not impossible. Definitely, shit, we actually already did something like that, and if we do retest that low, then yeah, bro. That's interesting. That's definitely interesting there. Anyways, moving on. Close above these supports would be bullish, but obviously we just faked out, so why would we close above them again? Like, we just fucking faked the fuck out on them. Seriously, we're not... Odds of that happening are weak. Moving on. Close below is a sign of weakness. What I'm expecting, and if breakdown, next support, obviously 50% retracement level came in clutch in the past. As you can see in the middle there, on the other section of the 50% retracement level. If you just look back, right in the middle of the price action, you see what's touching the 50%. That's old resistance. And then beyond that, looking at 78.6, but it didn't necessarily confirm as resistance. It more so just bounced and it didn't retest. So, yeah, I don't know if that's going to hold. If it holds, it holds, but it doesn't have to, especially if the price action rather test the weekly EMA as it moves up higher, and if that becomes invalidated, then yeah, probably the 28, not 28. If the weekly 200-week EMA breaks, then yeah, I'd say the 78.6 Fibonacci level can definitely break. Like, especially if the EMA is above it. Like, yeah. Like, that's 200 weeks of data, it's not based upon a retracement move. It's based upon 200 weeks of data. So, yeah, I would say it could fucking capitulate. So there's literally a couple metrics holding up prices. We have the Fibonacci supports, that's 2. And damn, not some of those scenarios aren't even granted or tested yet. It's literally 3 scenarios. The Fibonacci levels, those 2 levels that I stated just now, and a potential 20 EMA test. And we haven't tested the 200 weekly SMA. And if we do test that, then like if we break that, I don't think we will, but it's not impossible. Like, some of these things should hold. As if they don't hold, then it isn't healthy. So I don't want to see all these capitulate. But we have to play our probabilities. That's what this is about. It's not saying what's going to happen and being biased. It's about what is happening and where is it going. And how am I going to maneuver off of events that I do not have control over, but yet I can read them. Indications, but not crystal ball, but indications, right? Moving on. So in conclusion, with these bearish structures being created in the dominance are the three biggest crypto players, causing Ethereum dominance to rise with sell-offs. I believe you don't have a choice but for most altcoins to capitulate and make lower lows as it turns into Bitcoin season, with Bitcoin dominance heading higher. To find lows, I'm using my strategies combined with Benjamin Cowan's non-bubble Ethereum data, along with date range timeframes that I made for myself. Other Ethereum capitulation risks include Ethereum lockup release, regression risk, regulation, bankruptcies, hard manipulation, black swans. And I'm sorry if I said any of this stuff wrong in this conclusion. Not this video, but in this conclusion, I'm just running out of time. I don't want my camera to die and then all this shit's erased and then I'm pissed. But moving on, make sure to like and subscribe for the algorithm. Make sure you comment any new topics you want to be covered or questions you have about this video. Thanks for watching. I'm Vlad Ethereum.